All right, everybody, welcome to the Smart Money Closing Call with Invest with Jacob. My name is Jacob Gabbard. We do this call every day at, we'll say 3:55-ish. Most of the time it's around 3:55. Sometimes I'm a few minutes late, just kind of depends on how busy of a day it is. We have the Fed minutes today. On the left side of the screen, you have the ES. Well, actually, you have the 5-minute on both, so let's switch that. On the left side of the screen, you have the daily chart. And on the right side of the screen, you have the 5-minute chart, so we can just see how it closes. And right now the Bears are trying to win the day, and in all honesty, I think I would say the Bears have won the day in the sense that NASDAQ is red. ES is a little bit green here, but the Bears did what they had to do, which is not allow a breakout. So we'll get into what I mean by that here in just a minute. But this shouldn't be really surprising. Yesterday we talked about the fact that they should come down to about 7,700 and then bounce, and then we'll see what happens, because what happens next, and including right now, what happens next is really important. And so we've got the bounce off of 7,700. You can see they came right down into that level, bounced it back up, and then retreated back and failed breaking back through that 77.30 level or so right here, or 77.50, excuse me, level. So about 9 seconds into the close here, and then we'll make it a big screen. 5, closing at the bottom end of the VWAP range, which is what these are here. All right, let's go to the main big screen here on the daily. Okay, so just to recap, if you are new to the stream, we go through the S&P futures, the NASDAQ futures, and then we do 2 stocks of your choice. You put them in the comments, and I will break them down. So if you have a stock you want me to review today, put it in the comments, in the chat, and I'll do it. The first 2 get done. Anything after that, if you want a super chat, I'll do. Otherwise, we'll just keep it at 2 and go on. So this is how markets work. If you're unfamiliar, they make a high, they pull back. They make a new high, and then what they pull back to is to test the previous high. So they came back and tested the previous high. Now what happens next is really important, which is what I said earlier, meaning if they hold 7,700 and can get back above 7,800, then we're on our way to 8,000. They've accepted the pullback as corrective and just a back test. The bulls are in charge, and on our way to 8,000 we go. So that would be the first scenario that we would look at here. If they fail this back test, so they come down, they test it, they bounce, and then they retreat, which is kind of what we did today on the daily candle, closing at the lower half of the candle, and they break back below, and this is the key part, 7,700 with acceptance, and I'll tell you what that means in just a minute. Then we have a little bit of support right here at about 76.80, the 21-day moving average, although I suspect that will break given where the NQ is and given that we already kind of tested it yesterday or today a little bit. They have a little bit of support at 76.20, but in general, we would look for them to come to the bottom of the range. So as we talked about in yesterday's video, if you are looking at this little flag we have up here, this is basically a miniature version of this. So this big giant flag here, just shrink it down, and it's not exactly the same shape. They made a little higher high here, but it's the same idea. They made a high, they consolidated, and they failed to break out. So they got above this flag, failed to break out, and they immediately raced to the bottom of the range. So here you have the flag. They broke above the flag, failed to break out so far. If they fail 7,700, they should race to the bottom of the range, which is 7,300, 7,330 roughly. So how do we know that they're going to fail? We don't yet. They haven't failed yet. All they have done is back tested the prior high, which is extremely normal behavior in a bull market as long as it holds. If they get below 7,700, so for instance, if they test the 21, bounce back off of it, back above 7,700, and then come back down and break whatever low they make right here, that means that they failed this level, and we're very likely to see them come down here over the next days to potentially even a week. They're going to have, like I said, they're going to have some support at 76.20, and they'll have a little bit of support down here at around 74.82, but in general, it should look more like it does up here, where you just had 2 red days that took us back to the bottom of the range very quickly. Here it might take 3 or 4 red days. I'm not saying they're going to do it in 2 days. But the point being, they generally run through that support pretty quickly, because this is a failure of the bulls, meaning no bulls are going to be defending here or here in most cases. Remember, we are on the side of probability, not the side of fact. Everything anyone says about the market is an opinion, not a fact. No one knows what's going to happen tomorrow except maybe the institutions and maybe the market makers. But even they get surprised, and even they get underwater and in the wrong spots, and even they get liquidated. So don't think that anyone truly knows. But if you know what the probabilities are and how the market reacts and why it reacts, if you know all of those things, then you can have a high probability outcome that you can trade. And that's what we look for. So the probability, if they fail 7,700, is that they will retrace this entire move. If they hold 7,700, the high probability, if they can get back over 7,800, is that they'll go to 8,000 and tag that big round number up there. Now, can they go higher than 8,000? Yes, but that is the next target. So that's what we're looking at on the ES. Any questions about the ES? Chinro wants AAOI, no problem, and Myth wants Sell H, no problem. Those are the two we're going to do today. If you want one done, you can super chat it, and I'll do it. Otherwise, those are the two we'll do. Just a quick, if you're new here, I know there's probably some new people on the stream. Just a quick thing about supply and demand and how the market works. What makes the market go up and down isn't isn't news. It is sentiment, and it's buyers and sellers. And more than anything, it's price action that tell you where the buyers and sellers are. So here's a quick example so you can kind of understand what I mean. The market made a high. It decided that that's as high as it was going to go, and they liquidated some people and came down quickly. They bought very sharply off of this level. They had 1, 2, 3 straight green days that took us almost all the way back to the highs. That tells you the buyers are sitting here. They want to be here. This is where they liked entering this market. So when they come back to that level, so you go up, 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 and then back, you should expect buyers to be here. If they are not there, they will simply slice through that support and keep going. That's why we look for acceptance. That's when I talk about acceptance, that's what we're looking for, is we're looking for the buyers to accept price or the sellers to accept price. They come back here and you get the nicest, biggest run off of where the buyers already told you they were. This is how you know where the market's supposed to stop. Does it always stop here? No, they could slice right through here and continue to the downside. But this is how you know where to look for bounces, which is why we don't enter blindly. If you're in my room, check it out, investwithjacob.com. There's a link down in the description as well as the link to Squeeze Sniper. We talk about this stuff and train about it all the time. This is how you understand markets. So when they come back down here, I'm looking for a reaction. If I get that reaction, I'm looking for a trade. If I get that trade, then I'm looking for this area here to be the next area of interest, and it is on the way back down. They can do it 2 different ways. They can come up to this zone and fail it and go through, or they can go directly through and then come back and test it. Either way, they're going to test this zone more often than not. Once they test this zone, we have an idea of what's going to happen next and where it's going to happen. So those are things you really need to know about the market if you want to be successful at trading. Don't worry about the news headlines. Don't worry about what the yen carry trade's doing or what gold's doing or what anybody else is doing. Worry about where the buyers and the sellers are. Worry about where the institutions are buying. Become an institution, and then you get to be the casino. You get to be on the side of probability, and that's where you want to be. Then you're no longer gambling. You're trading and you're investing. All right, moving over to the NASDAQ. So NASDAQ did the same thing. We had 30,000 marked off here. I said they should come back to 30,000 on this bounce. They came back. That was the big denoted point of the day. And the NASDAQ looks a little different. So they are not at the highs. They're not back testing the highs. They are back testing a lower high, and they failed that lower high so far. Now, that doesn't mean they have failed the move. The move can stop right here at the daily 21. It's a very common catch-all and continue. However, they caught the 21 today, ran it back up to the 8, and failed back to the 21, which is not a good sign for the bulls. That is a bad sign. It tells you that the bears won the day because the bulls had every opportunity to get it back above the 8, get momentum in the upward direction, and they were rejected back to the 21. So this is not a great sign for the bulls. Doesn't mean that it's not a trap and overnight they can't rally. Of course they can. It's just a warning. It's a warning that the bulls were weak today. And really, the only reason the market was green is because the ES and RTY carried it. All of the littler stocks carried it, but the Mag 7 was okay. The Mag 7 helped carry it, but the SMH was down, and Nvidia was down, and those are two heavy stocks. Well, SMH is just the conglomerate of all the semiconductors, so all the things like SanDisk and Micron and all of those are weighing down the market with Nvidia, and that's where people are watching. So that's where sentiment is. It's in the AI trade. So right now they're holding the 21. If you don't know what these are, this is the 21. This is the 8-day moving average. 8 is your momentum. When 8 is above blue, or when red is above blue, momentum is up. When red is below blue, momentum is down. When price is below red on the way down, momentum is strongly down. You can see it rides the 8 all the way down. It comes back, checks in with the 8, comes back, checks in with the 8, and continues down. As long as it's below the 8, momentum is down. As price carries itself back higher and gets through the 8, it gets back through the 21, momentum starts back up. They check in with the 8, make a new high, came in, check in with the 8, and now they're failing again. The 8 is your momentum indicator. The 21 is your trend indicator. Right now the trend is up. They're above the 21. The trend remains up. As long as the red is over the blue and price is at least above the blue, trend is up. If it's above the red, momentum is up. So that's what those are and how we use them and why. Right now, they're pushing on the trend. They're trying to break the trend, get below the 21, and switch this market to the downside. And then if the red crosses the blue, momentum is now to the downside. And as long as they stay below the red, momentum is down. That's a very powerful indicator because they use it quite a bit. You can see on the big move up over here, they rode the red line. Momentum was up. They checked in with it here. They checked in with it here. They come back. They checked in with it here. They checked in with it here. The 8 is always your indicator of momentum. As soon as they got below the 8, momentum died. They came back down, set a low, got back above it, and now momentum is waning over here at the top. They've tried to reverse it back up, but it's right now battling. So same thing on the NASDAQ. If they can hold the 21 and the shelf, you got two things here all working with each other. This shelf of lows, they wicked into it, closed on it, got below it and shot off of it, wicked into it, closed on it, tried to get below it and came back, closed on it, pushed off of it, closed on it, or wicked into it. This shelf is huge. This is huge support. They wicked into it today. If they come back below that shelf, that is a breakdown, and that will come to at least 28,933, but I suspect we'll break on down to the lows here and see kind of a rapid sell on the NASDAQ. But minimum target is this 28,939 and see what happens. We never just assume they're going to come to the low, but that's generally what happens. So if I was shorting this, if they broke the 21 or broke this shelf at least, at 29,283, I would take some profit at 28,906 and then see if they gave me a breakdown here and then maybe take some profit down around 28,400 and then look for them to come into the lows or further. So that is what we're looking at on the NASDAQ. If they can get back above the 8, that should propel them back up to 30,000. If they can get back through 30,000, that's the key, right? 30,000 is the big level on the top of the range. If they can get back up through, then we're likely coming to at least 30,500, then 30,680, and then probably the most probable outcome is new highs on the NASDAQ around 32,000. If they can do all of that. So 30,000 is your upside key level. This level here, 29,369, basically today's low, 29,375. Those are going to be your key levels to watch on the NASDAQ. Shinro, welcome to the stream. We'll do yours in just a second. Myth, we'll do yours in just a second. Welcome to the stream. Arcturian, yield curve control. I'll be honest, that's not a forte of mine, worrying about the yield curve. I understand that when it inverts, that usually predicts a recession within the next, 6 to 18 months or whatever it is. I understand the probabilities behind it, but it's not something that I deep dive into. I mentioned earlier today on the morning call that I am more of a price action type of expert, an Elliott Wave expert, a charting expert, but I don't want to give you information on stuff that I just don't have good information on. That would be something I'd go to somebody who's an expert about or knows more about yield curve than I do, or understands more about whatever the theory is that you're asking about. That is not something I worry too much about, because it's what I've learned about economic theory is this: I don't care. That's a serious statement, because economic theory in the macro sense controls the market, in the micro sense has no bearing on the market whatsoever. The same thing I said this morning. There's a saying, a very common saying. I forget who said it, but it's the market can remain unreasonable longer, or whatever the word is. It's not unreasonable. I say it all the time. I don't know why I can't come up with the word. Anyway, longer than you can irrational. The market can remain irrational longer than you can remain solvent. And what that means is, you look at today's headlines and you say, wow, that's really bad news, and the market shoots up 2%. And you look at tomorrow's headlines and you're like, wow, that's really bad news, and the market shoots up 2%. And then you look at the next day's headlines and the market's really, and they go, wow, that's really good news, and the market goes down 3%, and now you're out of money because you don't know what the hell's going on. None of the micro stuff matters a bit, not one bit. And you can prove that over and over again by looking at the headlines and looking at how the market reacts. Do bad headlines make the market go down sometimes? Of course they do. Do good headlines make the market go up sometimes? Of course they do. But it's arbitrary, right? We've seen tons of people. Google had a blowout earnings, lost a ton of value on their stock. Apple was at their highs, cruising along, blowout earnings, lost a ton of value on their stock. And you can see it. Nvidia, their last like 4 earnings have been absolutely incredible, and they've gone down each time. So the nature of the news doesn't matter. Good or bad can make the market go up or down, which makes it arbitrary. It makes it completely useless because you're just guessing. Price action is where it's at. It's where the money is. It's where the buyers and sellers are. So if the yield curve is inverting and that's going to predict a recession, cool, win. 6 to 18 months. Cool, that's a 1-year window I have to watch. That's not very useful. What's useful is, oh, hey, they're at resistance. They gave me a signal that they're going to reject this resistance, and I can trade it. That's useful. Hey, they're at a low that I can invest in for a long-term look. I want to invest in that. Those things are useful. Worrying about all the macroeconomic stuff, it's important if you want to prepare. Believe me, it is important. What's happening in the macroeconomic world is bad. There's a lot of bad under the hood. But it's not important in day-to-day investing, so I don't worry too much about it. I'll be honest. I don't dig into those things because it fills my head with a whole lot of clutter and misguided stuff that'll make me make mistakes. I want just clean, simple, easy trading. And that's how I try to teach it and keep it, because you can go read article after article. And the problem I have with that is I can go read one right now on yield curves. And it's going to tell me, hey, the yield curve did this. This is why they did it. And it'll sound really important, really well written, and really informative. And then I'll click on the next article and it'll tell me the exact opposite. Somebody else will tell me the exact opposite thing, and it'll be well written, it'll sound very informative, and it'll be very convincing. So now what do I do? Nothing is the answer. I don't know. I'm confused. I have too many indicators. I have too many news sources. I have too many things in my head if I do all that stuff. So I ignore it all because it's not important to the market for me and how I trade. And it's really not important to how the market works. They want you to think it's important. They want you tuned in to CNBC all day worrying about if oil's going up or not. And oil going up is a problem for the markets, but not today. Well, maybe, today was slightly green, but you know what I mean. If oil's over $100 a barrel, it's going to impact the markets. But you don't know when. You need to find where they're going to hit resistance and fail. Then you'll know when, and then you just trade it. Does that mean I win every trade? Of course not. Heck no. We lose trades. But does it mean I'm on the right side of probability? Heck yes. Yes. Anyway, sorry for the diatribe there. Just something to keep in mind. The more information you have, the worse trader you are, in my opinion. Learn something, master it, and leave everything else out the door. It's just a pain in the butt to keep up with. There's always something that's going to crash the market or make the market go to the moon. Always, according to the pundits. In the book I'm writing, by the way, when I can get back to it, I have so many things on my plate. I'm halfway through or so. The whole point of the book is to hopefully teach you that the conspiracy you feel about the market is real. And I don't mean that's a conspiracy theory. I mean that it's real, that the market is quote unquote rigged. Not in the sense that they set a price, they wait for you to put your $2 order in, and then they take your $2. They don't give a shit about your $100 order or your $1,000 order, or even your $10,000 order. That doesn't matter to them. They give a shit about how you believe the market works. Because What do they need to trade the market? And when I say they, I mean institutions. I mean the people with the money. I mean the people who are pushing around the price, the people who have the ability to impact the market in a big way. What do they need more than anything if they're going to sell 10 million shares or buy 10 million shares? They need liquidity. It's really hard to get 10 million or however many millions they drum up to move the market. It's hard to push that through because price will either go up really fast or down really fast. So it is in their best interest for everyone to think the same way, to write all the books about the same things, to write all the indicators about the same things, to have all the news stories about the same things, to have all the talking heads say the same things, and condition us because we're a herd. Humans are a herd. We live in cities. We work in groups. We're in families. We know when the winter's coming. We live in communities. We are a herd. You have in America, you have two major herds, Democrats and Republicans, that literally follow everything that those people say. It's insane to me. Both sides are absolutely insane. They will defend what they believe no matter the evidence put in front of them. Doesn't matter which side you're talking about. So we live in herds, so we all have the same kind of mindset about things. And if we're all trained the same way, guess what they know? They know when you're going to crack. And if you're cracking, there's 1,000 other people that are cracking at the same time and saying, I got to get out. And guess what they're doing? Taking their 10 million shares and buying up all of your stuff at your stops because that's their liquidity. That's how they get into the market where they want to. Then the market stops going down and scaring you and shoots up like it did here from July 30th to August 4th. In 4 days, it shoots up 500 points, or was it 3,000 points? Because everybody was scared coming down. Everybody's dumping their shares, and the institutions love it. That's what they created because they need the liquidity to rebuy the shares. So think about that. It'll be in my book when it comes out, but that's all how the market works and how they trick and trap you just literally over and over again in the market. I spend a lot of time listening to market makers talk about how they do it, how the orders work, how they manipulate the market, not manipulate it in a negative way. They manipulate it in an emotional way. So they're not manipulating it like they have inside information. I mean, they kind of do, but they are saying, we know that we can instill enough panic and fear into you, or FOMO, one or the other, either fear or FOMO. Fear is better for them because it's way more powerful. That's why the market moves down so fast. That you will crack and panic and sell, and they can buy it all up and be in where they want to and not have price going up. So they're buying on the way down. And they're buying tons of it without having to worry about their 10 million shares doing what this is doing. Then they dump and pump and not dump, they pump it in. They load up their position at the bottom when they're ready, and they got to get it back above where they bought it up here, right? So if they started buying, because they buy in like shelves. So they buy like here down to here. And they start buying a little, building their position, and then when they get down to the breaking point, they unload, and that's where most of their stuff comes in. That's where the bottom happens. That's when all the panic sellers have to now get long that help them squeeze the market higher. So now all the people who panic sold, or all the people who are shorting the market late, have to reverse course and buy the market, which helps them push the market up without having to use all of their shares to do it. And they can move price around on you. So sorry, I'm all over the place today talking, and I need to do more of the charts. So anyway, that's just a lesson on the market. Hopefully it helped some of you guys understand what happens out there and why you feel lost and trapped all the time, because that's what they want you to feel. Okay, we have AAOI. I hope you hung around, Chinro. Sorry about that. I know that took a while to get through. AAO, Applied Optoelectronics. Sounds like eye surgery or IAI. IAI. EYE. I don't know. And opto, it sounds like eyes. Vision. Mm-hmm. 1, 2, 3, 3, 4, 3, 5. Okay, so this looks like it's topped rather, and I know that's not super good analysis, but there's a really solid 5-wave structure here. You have your 1, 2, 3 of 3, 4 of 3, 5 of 3, 4, and 5. If you want me to delineate that for you. 1, 2, 1, 2, 3 of 3, 4 of 3, 5 of 3, 4, 4, 5 is your top. Then you have your A, B, C down. Okay, so this low came into huge support, which I guess I've done this one before because maybe a couple days ago or something. I don't know when I did it, but this is huge support, and they came right down into it. So they could have already been here when I did that. But they came into huge resistance over here. They got through that, so now they're above the resistance. So now what we have to look at is our targets. And it's certainly not impossible. This is wave 4 of 3. For this to be a very large wave 4, it's just not probable. It's certainly not going to happen very often that it's a wave 4, but it is certainly possible. They're at the 50% retrace, and they rejected pretty strongly off of that, coming back into this next support zone. So if they can hold that support, maybe they can start to build a bigger structure. I would suspect they will fail that support, if I had to guess. So you have a 1, 2, 3, 4. You do have a decent 5-wave structure here. I'd have to dig into it a little more. This is the daily. The daily is not always the best for looking at a 5-wave structure on the smaller scale. This is a kind of small time frame, couple weeks. But they're coming into major support here. I would suspect they'll bounce off of 118. So maybe this is like 1 of C, 2 of C. Come back into this 142 zone where the market rejected 3 days, came back up and rejected again. And then they plowed through it and then got right back below it, which tells you that this move up was pretty weak because they reversed it right below it really quickly. So maybe they bounce this support. They don't have to. C waves are very nasty and can be straight down, but generally you'd look for a bounce here. 118 up into this 140 area, and then you would have like 3, 4, 5 of C, something like that. 3 probably comes back down to this support and bounces. So this would be how your C wave is going to look. We can get better targets if I do something like this. I might already have this. Do I have this? I don't know. The 1.0 is down here at, is that $3? $3. Wow. That's the target. So we'll see how that plays out because that's all the way back down to the bottom, and they lose all of their gains that they've accumulated over the few years. Now, if you don't think that can happen, I can show you chart after chart where that happens all the time. That would be the projected path. Now, very often the 764 hits, and that happens to be incredibly strong support. So this could be a C wave that only hits the 764 at 41. But if they break 41, that's bad news bears for this stock. So I'd be looking for a bounce off of that. Why did I delete that? That was dumb. I'd be looking for a bounce off of this level right here. Somewhere in this range right here. And then this is going to be major support right here. If they get through that, though, they're coming into this level for sure. 41 is going to be the next target down. So those would be my targets for the next moves down, where I'd be looking for bounces and then continuation. But I would only start to talk about a new high on this if they can get back over 174. There's a ton of resistance there. It's also the 618 retrace. They have a decent 5-wave structure, so it's very possible that they could make some kind of very deep wave 4 out of this. And you come back and do this with 3 coming up to the highs and then 4 and 5. That is a possibility, but it would not be my probability. My probability would be for the downside on this one. And cell H. Celsius. Ooh, these guys are rough. So here's one where they came not all the way down to the bottom, but they're looking like they want to. This one, they retraced right into the 0.5 to 0.618 perfectly. And then you have a 1, 2 here. So let's look at our fibs on this one for downside behavior. Well, this one would go out of business. So the 764 is at 591. It's also a huge level of support, but this is going to be huge support as well. Right there. And right here is going to be big support that they're coming into right now. So they're bouncing off of this low right now. I would suspect this bounce to fail. I would expect this bounce to fail, and then come down into here, maybe give you one more like this into the 764. But I'd be looking for more downside here as well. They've already completed a 1-2. They're in wave 3 of C, so I would expect them to take out this low and come into at least 13. If they break this low, they're coming into 13. That's where they're going. If they break 13, they're coming into 591. And if they break that, they're going out of business. Probably not going out of business, though. All right, guys, we are going to wrap it up there. We had a long one today, a little over half hour. So I guess it's on a half hour because I was late. Hopefully you guys learned something today. If you did, hit that like button. Hopefully you liked what you saw today. If you did, hit that like button. Subscribe so you don't miss these. Share the video. That would help me out a lot. I give out lots of information, or try to give out good information for you guys. And I'd like other people to hear it too, so that we can kind of reverse that herd behavior and make it really hard on institutions, because they've been keeping us down for a long time, so maybe we can stick it to them. It's why I hate Robinhood with all of my heart and soul and hope they go out of business, because the guy who likes his chicken tendies organized a group to get on GameStop. I think it was GameStop, right? Dumb Money, that movie. And Robinhood froze all their accounts so nobody could take their money out. And by the time people could take their money out, they had lost quite a bit of their money. And that is absolute tyranny. And billionaires getting bailed out and the little guy getting crushed. And I hate that. It should be fair for everybody. If it's not fair for everybody, then that's bullshit. So I hope Robinhood goes out of business and all those guys lose all their money. Probably won't happen, but that's my hope and desire for the markets. Anyway, have a great day, everybody. We'll be back tomorrow. Oh, tomorrow's 3:30. Remember, tomorrow's 3:30 for the close. We do that. We had a great trading day today at 9 a.m. If you didn't check out that live video, go check it out. Anyway,